Good evening. Hopefully you can hear me well. My mic is a little quiet. I hope you're doing well. It is currently 10:34 New York time, so it is pretty late, and it is very hot. I'm gonna take a look at the weather right now. It's not that bad, 74 degrees, but it's really hot. So if I sound out of breath, that is why. But anyways, um, ESM 2025 ends intraday trade review for May 15th, 2025. So today, before I get started, we're going to be here for like 5 minutes on the screen, and then I'm hoping for this to be a 15-minute, 20-minute video. But basically, to sum it all up and give some context, it's been about, I would say, a month at least since I've taken any trades. The market, my inner dialogue is that the market has kind of been a gunslinging place, I guess. That's the first thing that comes to mind. So, about a month ago, we had all the pressure with tariffs, and the market moved very fast in very large ranges. So, essentially, I'm just kind of keeping my hand behind me, not really trying to push any buttons. At the same time, if I'm being honest, I'm a little fearful. So I'm going to try to incorporate more psychology into these. And this one is not going to be as technical based as I'd like it to be. But yeah, I'm trying to incorporate more of my logs and, be a little more, I guess, I can't really think of a word, but just more insight into what's going on in my head. And so I'm kind of thinking to myself, throughout the past month, that it's better if I don't take a trade, because I don't want to lose, essentially. So it's fear of losing. And I've seen good setups and I've seen bad setups, and most days have been very, very poor price action per se. It moves, it consolidates even longer. It moves, it consolidates again even longer. Then it reverses, then it consolidates, essentially. And that's just what I've observed. And so on one hand, I'm glad that I didn't trade. But on the other, today and this week, I kind of just observed that when I logged on today onto my trading view and I was taking a look at the market on my phone, I felt very disconnected. And it wasn't because I wasn't looking at the market, because I have been, eyeing the market here and there, logging it, and it was just because I didn't have a proper feel of price action. So once again, this is what I'm thinking. So I just went into the market and sort of threw in a shot, kind of like a jab, and I'm picking this up mostly from one of the lectures from ICT. And I know that this strategy, or the quote unquote icebreaker strategy, is definitely from him. I would have not really ever done that myself, if I'm being honest, because my psychology is, if I'm going to go into a trade, I would want it to be the best A plus setup. And so essentially, I would not just throw in any random order, long or short, unless it's justified. But what I was kind of dealing with, and what I've thought was a good idea, was throwing in a market, or not a market order, an order in the market, and sort of just breaking the ice, whether it's a loss, whether it's a win. So usually I do 2 trades max. That's my rules. I try to keep it at 2. Um, and anything over that, I've sort of broken my rules. So winners, I try to max it at 3. But 2 losers, call it a day, move on. So that's a max risk of 0.5% or 10 handles. But anything else that I want to clarify? So yeah, basically 2 losers max. And the reason for that is because I'm open to taking 1 loser, keeping in mind the past week, past 2 weeks, current state of mind, and how that sort of will affect me. If I feel blank after a loss, then I'll feel comfortable going into a second trade. But there's times where after one trade, I've just decided that it's best for me to stay away. And usually I just turn off my chart and walk away. And so that, to me, that's kind of a weakness. I think it would build more discipline if I were to stay there and just watch it, and that would add more screen time to my experience. So, but yeah, that's kind of what I found works best for me. I have traded over my 2 rule limit, even while being conscious of it. So I'm being completely honest here, and I've just noticed through the essentially data that by the 3rd trade, sometimes by the 2nd trade, I'm already in tilt, and then anything after that is tilt. It's revenge trading, gambling, whatever. All right, so I can vividly imagine or put myself in a scenario where I can imagine how I was feeling at that time, and then I start to think to myself, okay, if I'm sort of approaching that level of frustration or anxiety, or if I start thinking to myself negatively, like, oh my god, of course it happened to me, or just anything negative. There's no words behind it. It's a feeling. So it's not like if I physically sigh or anything, or if I, start, something I do is twirl my hair when I've always done it as a kid, and it's something that I picked up on recently in my trading, that I like to keep my hands in one place, whether it be on the keyboard or just, in my lap or on my desk. I don't really fidget with anything, but if I'm twirling my hair, first of all, it causes like some pain in my shoulder in the long run, so not a good thing. And I've noticed that I do it when I'm a little stressed or in a stressful situation. But yeah, anyways, 8 minutes in. So yeah, today was just basically, without wasting too much time. So this is the Trade of 8 screen, and I've tried to resemble it as closely as possible to a TradingView chart, but you can see it's a little different here. And so over here, you see I went short right here at that price, and I'll narrate why I did that in a second, but I'm just kind of giving you an overview that these are the executions on Trade of 8. Reason they're not on TradingView right now is because TradingView resets after 5 p.m. So you don't see those executions anymore. So once again, yes, this is an eval account, and I'm trying to be as honest as possible in everything I say. So here I went short, and I set a 5-handle stop and a 5-handle limit, and you can see that got hit right there on that candle. So I got some feedback from that, and then later I went long right here inside this fair value gap, and then took profits just a little bit above that high, and I'll tell you why. Here are the orders right here, and so yeah, this is the funded eval account. You can see, I'm not going to waste too much time here, but essentially I went short here at 59.24. My stop got filled about 6 minutes later. Sorry, 9 minutes later. And then you can see this is the limit being canceled. The next order I get filled at 59.31 and 3/4. Stop gets canceled because the limit, the limit gets hit. So 59.37 and 1/4, just plus some of 5 handles, and I'll show you why. But quick overview, we have the daily chart here. So first things first, for the week, we have the new week opening gap on May 11th, 2025. You can see that the opening is 57.61 flat, and the close is 56.84 flat. So we traded up into this buy side here, and typically I would expect this to act as a SIBI, but you can see that we have not actually traded down into it yet. So I'll tell you why I kind of favored short, and I know that there was some bias behind my first trade. It's not like I flipped a coin and just went short. I happened to go short. It wasn't a 50-50. I did attempt to go short for a probable reason, but I was just kind of indifferent to the outcome is the mindset that I had for that. So, and the idea of me doing that icebreaker is because I haven't been trading for the past month, and so I felt out of sync, and the best way for me to get it back in sync was to sort of involve myself in a way that really brings my attention to the market. And so I'm pretty sure this was discussed in 2022 lecture, that just throw in an order, and I had a equal risk to reward, 1 for 1, and just see where it goes. And it gave me actually a great feel of the marketplace that helped me take my next setup. So hence the title. Now you can see we had the SIBI, failed to trade down into it, buy side resting above here, but we did have these highs in here, and at the time I was not looking at those. I was actually looking at the hourly chart, which I'll show you. Right here we have this volume imbalance, which has been traded too, but more importantly, we have this daily fair value gap, buy side imbalance, sell side inefficiency, coupled with a volume imbalance with the settlement price off. So today we opened here right above it, traded all the way down. So we traded all the way down to the low of the inefficiency and mohawked below it or beneath it, and came all the way back up. So this has been delivered efficiently. So we only delivered buy side on one side, and then we came down, deliver sell side, and buy side one more time. So I'm not disqualifying the setup for it or the opportunity for it to come back down into there, but it has been balanced. So we do have Friday's trading, which could possibly be coming down from here to here, 20 to 30% of that, but that's not really what we're focusing on right now, and I'd have to take a further look. Alright, here's the hourly chart, and we have this 1 hour buy side liquidity at 3 p.m. from May 4th, 2025. So that is the same buy side I talked about on the daily chart, just a little bit less. It wasn't the daily high, it was an hourly high. And because I have it anchored on an hourly chart, it shows hourly. Now, adding some more details, we have this gap right here, and you can see the market opens on Sunday, trades lower, and then just starts grinding slowly throughout the overnight Asia session, and then at midnight during London we trade, like we give this little wick up into here, or this big shot up into here, leaving this portion of the wick, which is on a lower time frame a down close candle. So extend that out 50% of that, take that, and then that lines up right here, and hence that creates the setup for this daily fair value gap. So this is kind of what I'm looking at, but essentially I'm looking at this gap right here, and I'm kind of hoping for it to act as a magnet. It doesn't. I wasn't expecting it to go down into there, but we also did have the weekly first presentation fair value gap of the week somewhere down here. So I don't have it annotated here, and it's not in the presentation, but if you go to the first gap of the week, it lies there. And so I was kind of hoping for it to trade down into there and revisit it sometime, but it's not looking like that right now. So, and here we have Monday's opening, midnight open, so true day open. Tuesday's true day open. Wednesday's true day open. You can see Monday, Tuesday, Wednesday, all 3 days we open, have some sort of Judas swing, trade higher, open, Judas swing, trade higher, open, consolidate, but eventually on Thursday. Alright, so back, I had to pause the recording. My dog had to go out, but I don't remember what I was talking about exactly. But just taking a look at this, like I was saying on the daily chart, we came down into this gap and then redelivered it back to the upside with buy side here in the form of relative equal highs. And so something I've noticed is that when we had this high right here, and then relative equal lows resting right beneath it, typically the market has a way of going up there very fast. So next slide, we have the 15-minute chart. You can see that a lot of back and forth price action, wicks to both sides, chop, but eventually targets are booked. And the best way that I can put this is, it's not untradable, it's not impossible to get a read on, but it tests your patience. And so there's a lot more honestly behind that. But anyways, here on the 15-minute chart, I have the 1 minute first presented fair value gaps for both sessions of New York. So the New York AM session and the PM session. And you can see how, I'm gonna think before I say this so that it comes out proper. Without really looking at the chart, I guess this is kind of like what I've noticed, is that below relative equal lows or highs that are formed near or at a first presented fair value gap tend to be, more often than not, booked in price. And so while you can use it as a trade premise, while you can use it as a barometer, you can also use it as justification or more confluence behind liquidity. And so what I mean by that is that, taking a quick look at this, we have made the market jagged to the downside. And so now the next market's objective is these clean relative equal highs, trendline liquidity, whatever you want to call it. There's a pool of liquidity above this high and above this high. And so in confluence with that, without putting on too many of the first presented gaps, you can see that from the 13th of May with the 1:31 p.m. first presented gap and the 14th of May 9:34 a.m. first presented gap, market traded there for quite some time, essentially, is what this tells me. That the gap at 9:34 and the gap at 1:31 have been there for a while. Now, usually, if there's like these lows or highs here, and the gap is like overlaying along with these, and it's just like basically layered sell side or buy side, then it will tend to go there. And so that's kind of what I noticed just looking at this chart. But going into the next presentation here, we had the 1 minute gaps here and this 1 minute gap here that I sort of outlined in my tape reading. But you can see we have a 5 minute. What I kind of try to do is keep the 1 minute gaps on a 5 minute chart, because it's like a training exercise. And so here's the 5 minute chart. Blank. And then here's the 1 minute chart with the gaps that I used. So right here, 1 minute bullish fair value gap, 12:59 p.m. and then the 1 minute inversion gap at 2:14 p.m. And so another prime example of that is we have these lows here, and then the market goes down into that and creates a sort of a, what's the word? I'm blanking. A market structure shift. And then we use this gap as inversion. And so these are levels. There's nothing like particularly special about this, but at this time I just drew out this gap because I liked it, and I saw the candle trading down into here, and this is post trade, so all the trading occurred over here. And so you can see that I just keep those on the chart. And so we go 1, 2, 3, and then we start to trade higher, creating the high of the day, and after that we don't trade to it. So this is something I was watching in real time, but I had no expectations for it. And if I'm being completely honest, this I actually had wanted to see it trade above it, but until it trades above it, using the logging exercise that the 15 minute, or was it 15 minute? Can't even remember the title exactly, but the logging, first presentation fair value gap logging exercise that I posted. So essentially I would just wait for a close above the high, and then I would utilize that as a long, which I did plan on doing, but I didn't see it, so I didn't really do anything with that. Here is the first visualization of the first short that I took. So you can see that I took the order here at, what was it, 12:58. So this is when I placed the order, and this is when I actually got into the trade. Sorry, was it 12:38? Alright, so it was actually 12:27 if you go back into the screenshot that I posted at the beginning of the slides. It was 12:27 that I placed the order, 12:28 I got filled. So you can see that the market essentially kind of showed profits for a while in the green. But actually, scratch that. I'm not really focusing or trying to focus in my recaps on green or red. So it does come back down from the entry, and what I had wanted to see was it come back into the sell side and then eventually melt into this first presentation fair value gap. Now what it does is it trades aggressively higher, leaves a gap here, and we also have a gap here, so it's kind of like a balanced price range, but market does not trade there, and I see this high, so I'm expecting a new high of day as the premise for the next trade. Next trade, I place the order here, I get filled long right here at the lows. I think it's 59.31 3/4 is the exact low, and why I specifically did that low is because of the volume imbalance right here. So I wanted to get near the gap of that imbalance, the high of that imbalance, but I just set it a little bit lower at the high of that gap, and it turned out to be a beautiful entry, filled me at the low of that candle, and trades higher into this high, and I exited the trade a little bit above it, Reason being because from this low to this high, I threw my swing projections up, and above this high, I took the -2 standard deviation. So going even closer, here's a closer look, and here's the standard deviations from this low to this high. 1 standard deviation, 1.5, 2 standard deviation. This was the first deviation that comes above this high. And you can see, beautiful reaction there. Comes back down, trades up, sell side below here on a 15-second chart, sweeps it, new high of day. And that is the current high of day till 4 p.m. So that's about it. So to wrap it all up, I just want to get a few things off my mind in a cleanly manner. So I'm going to be cutting some portions where I'm kind of thinking or blanking. But yeah, this was not supposed to be a very much of a technical display, or sort of like, me personally myself, I wasn't trying to dive into specifics like nuts and bolts and whys, wheres, how, when, all that, like the 5 who's or W's. It was just a display or a showcase of the entry and exit and how I entered the market after a month of not trading, after being fearful to lose, how I broke the ice. And I wanted to sort of start incorporating more trades and be more transparent. That's kind of the goal of this channel, is to highlight my growth. It allows me to go back and look, and I enjoy making content. I've always enjoyed making content. So it's my dream to become a quote-unquote YouTuber. It's always something I've wanted, and I think this is 2 birds, if not 3 birds, 1 stone for me, because I get to upload videos, I get to help people, I get to log my own journey, my own path, my own, obstacles, how I overcame them, and it's supposed to be an honest log. So I'm really not trying to impress anyone. I'm not certainly looking for feedback. It's just what I did and how I'm going forward. I do some analysis on here, which I really just enjoy. It's an enjoyable activity for me to record, and while no one is really watching these, it's kind of just me talking to myself, and I'm okay with that. I enjoy that. So that's why I have no problem doing it. But more from a analytics perspective, I do want to sort of become more consistent, build an audience, build a community, and just, it doesn't have to be 100% traders, or it could be people who just enjoy improving themselves, or people, it doesn't have to be all trading related. I just want it to be people, if you are trading, then yes, people who want to get better at trading and just want to build a community or join a community, people who want to improve their note taking. I have a lot of stuff on Obsidian, a lot of personal self-improvement data that I track, like health analytics. I do a lot of things for notes. I guess the word is knowledge management, and it correlates very much to ICT and my own personal health. So I'm always trying to improve myself using the data that I obtain. So it's kind of like self-improvement. People who enjoy, once again, health, working out, fitness, all that shebang, that stuff. And yeah, my main goal is just be 100% transparent, as if I have a community. I want to build a community, and so that is kind of really, before I get any off or much off topic, or start blanking, I also do want to start getting better at recording. I have all these beautiful thoughts to me, and I really have a hard time putting it into words. So, it when I think of the words in my head, it comes out amazing, but literally right when I try recording it, when I started recording, I'm blank. So, I think that's just a desensitization thing. I start recording and I get a little nervous, and I think that's the experience with all people who record. They started at somewhere, and they might have gotten a little nervous, and yeah, if you practice something, you'll eventually get better. So that's my thought process. I just want to get a video or two, some short form content out there, and just see how it goes. Who's interested in what, and yeah. Thank you for watching till the end if you watched, and I do encourage you to subscribe. That's also another thing, actually. I do want to start. I do want to start kind of taking this seriously from the aspect that how well can I do? How far can I take this if I really invest into it myself? If I've never really been a huge fan of the make sure to like and subscribe, but from the algorithm's perspective, if people are not watching, liking the video, subscribing, or commenting, the video doesn't get pushed further. So maybe, I'm just trying to be authentic. I'm not trying to be that guy who, that guy, right? So if you do want to see the betterment of content, if that's even a word, or the improving or the status of my journey, if you are rooting for me or if you're not, just subscribe so you're active or you're up to date. I would really appreciate it, because 99% of people are not subscribed, which I know is the case for most people, but usually it's 80, and 99% is just out of this world.